Hi, Scott. Yeah, thanks for having me. That's exactly right. Right now, if you look back at prior bear markets, these type of rallies are very common. When we went bearish in the beginning of this year, we talked about how within this bear trend, there are going to be rallies. We are going to try to call these bear market rallies. This one we did not. But these are very common. A lot of the buying, or a lot of the reasons why we've seen this rally is that you're seeing systematic funds, CTAs, and others buy tens of billions of dollars worth of stock based on their models, based on price, et cetera. And then earnings season was better than feared. It was the worst since the pandemic, but it was clearly better than feared, and it was better than we expected. So that's what all kind of caused this rally. But our view and our conviction is completely unchanged, and actually has gotten higher just based on the fact of price. One of the things that I think it's fair to address is what is the bull case or rosy scenario for the market. And I think that the rosiest scenario that I can talk to and speak about is the fact that earnings estimates are exactly right. So what we see in print is exactly right, will not be impacted by any of the demand destruction or any of the raise in rates, et cetera. And number two, that the earnings multiple will be 18 times. And if that happens, we go to 42.50 in the S&P. And to argue that we are going to trade higher than 18 times goes against everything in history. The last 30 years, we've only traded above then during the internet bubble and during the post-COVID crisis when the 10-year was 50 basis points, the Fed funds rate was 0. So that, I think, is the rosy scenario. We have a soft landing, we go to 42.50, up 2 to 3% from here. And then our scenario, which I can get into, is much lower for a whole host of reasons that we've been discussing.
Why is the soft landing so far-fetched to you at this point? If we're starting from such a higher level than perhaps we otherwise might have been, why is it so hard to believe? I give you history, but maybe history is not the best read in this case.
Well, actually, what I would say is that I do think a soft landing is unlikely. But I guess my point is that if it does happen, that means that the earnings estimates that we see are probably approximately accurate, maybe slightly too high, and you're already at 17.5, 18 times earnings with a Fed funds rate going to 3.5 or 4%, quantitative tightening happening at 1.1 trillion a year, and inflation at a 40-year high. So that, to me, does not warrant an above-average multiple.